a sacar la carretera.
Founded in 1887, Peñoles is a mining group with integrated operations that explores and extracts concentrated minerals and produces and sells non-ferrous metals and inorganic chemicals. The company operated privately until its IPO in 1968. Since 2011, Peñoles belongs to the IPC Sustainable Index. The company has two business divisions, mining and production. All of the outputs of the mining division go to a production one, yet Peñoles buys a third-party concentrated mineral to make more efficient its production business. The company has 13 mines, a metal production facility called Metnex, and a chemical production facility called Macanet. It exports to 35 countries, and it is the main producer in Latin America of tin, gold, and silver. Moreover, it's the main producer worldwide of tin, silver, and metal.
Based on the IFC rating methodology of corporate governance, Industrias Peñoles has a rating of 3.4 out of 4, considering those 5 attributes. Even though 9 of the 14 board of directors are independent, they also serve as directors in Grupo Bar Conglomerate, which may lead to a conflict of interest. We support our highly rate of corporate governance with the rapid response to industry threats that have occurred in the last 10 years. Some examples of this quality of management are the cease of Naica mine in 2015 due to a flood, Soledad y Polo's mine suspension caused by legal problems, and the delay of the projects San Julián and Red de Plata because of macroeconomic factors and the low price of metals during 2015.
We expect an increase in demand for gold and silver. For gold, it will be used as a wealth preservation strategy. This is particularly true for developing markets with a strong currency depreciation. A clear example of this is India, holding the 32% of world gold. We have good agricultural expectations for the coming year, which will make rural Indian inhabitants to increase their holdings in gold. Central banks have become net buyers in 2009, and we are seeing investors turning their investments into gold ETFs, as it can be seen with the second highest demand in whole history. For silver, it is mainly industrially driven. However, we are particularly positive in this, as it is mainly used in cell phones, TVs, and solar panels, all of which has increased their penetration in developing markets. As opposed to precious metals, we are bearish in the demand for base metals. This as a consequence of the Chinese slowdown, as we are seeing that they are turning into a consumption-driven economy, which will likely decrease the consumption of raw materials. For the chemical division, we focus our attention in sodium sulfate, where we expect a 2 to 3% increase in demand until 2021, mainly driven by the consumption of detergents. As for supply, we expect a predictable increase in supply for most metals with the exception of zinc, where we saw a significant decrease in production in Australia's mine, which led to a decrease of 6.1% in the overall supply. The financial condition moving forward highlights our previously mentioned expectations of larger revenue, better margins, and healthy balance sheet. Larger revenue will be caused because of the increase of gold and silver prices. Peñoles will take advantage of economies of scale in 2 main projects. The zinc expansion facility, which will produce 50% more zinc than the current production and is expected to be concluded by 2018, and the increasing production of Magnalet. Both decisions will increase their margins. Also, we are particularly positive in the funding for the moving forward funding for Peñoles. As we can see, they have a low leverage of 22% debt to asset ratio. Unless there's a significant Mexican downgrade, we expect debt to be the main funding source.
Fixed assets turnover has been aided by integration of the whole value chain within the company. As we can see, in the last 2 years, Peñoles has focused on maintaining a strong liquidity and cash holdings, with a cash rate above 2. We expect them to use this liquidity to finance expansion projects. We await a slight improvement in the return on equity, consequence of the growth in the net income margin. We foresee liquidity to be strengthened by retained earnings. To take a competitive position in this kind of industry, it's necessary to two things: natural resources and cash cost efficiency. And Peñoles has both, being the company that invests the most in exploration projects and beating the competence with a cash cost for silver extraction of about 40% less than the average.
Due to the diversity of Peñoles revenue streams, we opted for a sum of the parts valuation using methodologies appropriately tailored for each division. In addition, we made a relative valuation which confirms our bar recommendation. The 70-30 weights were chosen because of the robustness of absolute valuation. We valued the mining division of the company using real options, and we used a discounted cash flow valuation for both the chemical and metal production divisions. As my colleague previously mentioned, the company's management has a track record of good decision-making when dealing with abandonment, deferral, or expansion of mines, partially due to the company's operational flexibility. We decided to value the mining division of the company using real options since it accounts for this operational flexibility. So, we made a binomial model for each metal extracted from each mine. Used a risk-free rate composed by a 10-year Mexican bond minus the country risk-free methodology proposed by the Modoran, accounted for the individual cash cost of each metal per mine, the probability of increase or decrease in the price of the commodities, and assumed a continuous mine production until the mine ran out of its proven reserves. This part of the company is valued at 276 billion Mexican pesos. To value netbacks, we use a discounted cash flow because of the predictability of the inputs to the model. To forecast the revenue, our main drivers were the expected price of the commodities, the metals demand, the exchange rate appreciation of revenue, and most importantly, the expected mining production of the company, following Peñoles' strategy of increasing its mining production in order to cut costs incurred in buying to third parties. As for the costs, our main drivers were the inflation that directly affects Peñoles' cost structure, the expected US border tax, and the third-party purchases which will decrease over time. We also accounted for the production capacity of the facility, and this gave us a price of 54 billion Mexican pesos.
In terms of magnet, we also used a DCF driven mainly by the revenue of each of the outputs. In terms of cost and expenses, we account for the border tax of US as well as Peñoles inflation, which was calculated by adding an average historical spread to the Mexican central bank inflation forecast. The value of this division is 9 million Mexican pesos. To achieve the terminal growth rate, we use a rate of 2.5% based on the GDP of primary sector forecast. As for the WACC, we use a rate of 10.37% based on the CAPM, based on the cost of equity. Finally, we sum up our valuations and achieve a target price of 594 Mexican pesos. In addition, we did a relative valuation to confirm our buy recommendation. We compared the 5 global peers that have the same mining production as Peñoles and compared them with a PE ratio and EV over EBITDA. The target price was 573 Mexican pesos. Weighted with the previous percentages, we achieved our current target price of 588 Mexican pesos.
Trump's administration will most likely raise the border tax. We estimate and perform our evaluation with a 6% tariff, the same as before NAFTA. Peñoles' functional currency is the US dollars. 95% of the sales are represented in this currency, and also half of the production cost, when the remainder is in Mexican pesos. Based on a regressive analysis of the last 12 months, depreciation of 1 Mexican peso represents for Peñoles an income of around 4 billion Mexican pesos.
A downgrade in Mexico's credit score would mean a hike in the reference interest rate, increasing Peñoles' capital expenditure in upcoming projects. Precious metals represent 60% of the revenue of Peñoles. If the demand decreases, the price will follow the trend, thus making Peñoles take a low production scheme that will affect directly their current expansion projects, valued as 22% of the company reserves. Thank you all for your attention. We are now ready for the Q&A.
¿nos escuchan hasta atrás? O...
Sí, con el micrófono se oye perfecto. Well, the first question, you talk about the good expectations for gold and silver, but it was not clear if these expectations are in terms of price or volume, and how they are going to benefit Peñoles in terms of revenues or cash flows. Could you please go deep into that for me, please?
Sure. First of all, we expect an increase in demand for gold, which will in turn increase the price of gold. The increase in demand, we think it will be mainly driven by the increase of Indian rural inhabitants in gold, as it is the 32% of world gold. As you mentioned, this will affect the cash flows, because as the price increase, as we saw last year, the production will increase also. So the cash flow will increase, the revenue will increase by the increase in gold and also by the increase in production.
And so this is a one-to-one benefit in terms of how much the price goes up is the benefit for Peñoles, or there's some leverage from the company in terms of benefit more than the movement of the price of the commodities?
Peñoles will be benefit because some projects, as San Julián, start operating this year, mostly in 4 months. So this volume that Peñoles would perceive as an extra would be of these expansion projects. There are also a lot other ones like Rey de Plata in Guerrero, and some others in the few years coming.
And finally, could you please compare the return of equity of the company with some of their peers or the industry, or again against other industries, and what do you think about these levels?
Well, we think that Peñoles is really strong against their peers. We think that they can take advantage from them. And nowadays Peñoles has a high PE ratio. But in the mining industry, as we know, there's a cycle. So when there's a high PE ratio, it means that the company is investing more and more in expansion projects. So we think Peñoles will have revenue from those expansion projects in the following years, decreasing their PE ratio.
Just adding what my colleague says, in the return on equity, what we saw is that Peñoles is in the half of, well, in the average, because they invest a lot of money in the exploration projects. So the return on equity is not the highest, but not the lowest, and with our relative comparison, it's in the average.
I don't know, but probably you know that most of the economies of the world are expecting that the interest rate in the United States start to go during the next months, probably in these months. And most of them also believe that once that the interest rate start to go, the price of the gold probably decreased. What is your opinion about this scenario?
Actually, we think that's an inflection point for gold. We think we perform our evaluation based on the expectations of 3 rate hikes that most analysts have. However, once Fed achieves this hike for the next year, and they decide to go more contractionary, or they decide to increase the pace of this increase, we think that price of gold will react and start decreasing, and in hand will decrease the price of Peñoles, which is leveraged more than the price of gold.
Hi, I have a question regarding the corporate governance that in particular as CEO of the Mexican Exchange concerns me. You assign a very low rating to the treatment of minority shareholders, but Peñoles is a listed company, a regulated company, and therefore a safer investment, and with an exchange law that protect the minority shareholder rights. So, and you're saying the opposite. Is that because of the company, or is a problem with the Mexican regulation and the minority shareholders?
No, this is due mainly to our evaluation methodology. We use an IFC methodology that's the same that uses the stock exchange here in Mexico. And we give a low grade in minority shareholders, mainly due to the fact that, as you can see in the graph,
Not in this one, but yeah, there is a
there's another
debate 1 out of 4.
Yeah.
Okay.
But here you can see the minorities.
Yeah.
And that's the reason, like, most of the shareholders of Peñoles are related either to Peñoles or to the Val holdings.
Okay.
So that's why we have a low rate in corporate governance due to the fact that it can be a conflict of interest.
Okay.
However, third, to complement that answer, we also believe that that lack of independence can be reduced, like the conflict of interest can be reduced due to the fact that the Val holdings and Peñoles have the same interests.
Okay. Thank you.
Thank you for your presentation. Two questions. Well, the one is, could you elaborate a little bit more on your real option valuation and in terms of methodology, assumptions, and everything you used to do that? And why did you choose that methodology for mining?
Sure. First, for the assumptions that we took into the model, where we took into account every single cash cost of each metal per mine, and we use it until the mine ran up its proven reserves. It's proven reserves, not probable reserves. It's proven reserves. So we took information of predictions about the historic change of each metal, gold, silver, zinc, and copper, and we ran a model for each mine, and then we used subtracted with the rate we mentioned. But it was done for each of the 13 mines, and at the end, the value of the mining division of the company is all of those values.
I would like to work further in what my colleague said. Actually, mining is an industry that characterizes itself by the high importance of management. So we think that in a mine, when the price increases, actually Peñoles can increase the production so that they take advantage of this increase. However, it happens the other way around. If the prices decreases enough, Peñoles can decide to stop producing. And so this has a similar payoff to a call and a put option. If the price of the gold goes to a certain level, Peñoles will increase its production, so it will benefit not only because of the increase of gold, but also because of the increase in production. And the other way around, if the price goes sufficiently down and Peñoles has a high cash cost for that mine, they can just decide to stop producing, and that's what we accounted in this part. So, for instance, imagining that in 2022 the price is 1.25. Although Peñoles will have a negative cash flow, the mathematical expectation is that if in the next term it is positive, they can still produce. However, if they decrease another time, Peñoles will no longer produce and will abandon the mine or defer the production in that mine, and that's why we accounted for real option valuation.
Thank you.
What do you think about the cost of energy in Mexico? What will happen with the price if the government could increase aggressively the price in the future? The cost, no?
The cost of energy, right?
1 minute.
Peñoles has expansion projects in wind farms, mainly due to the fact, first, to reduce their cash costs, so they produce their own energy, and in case of the government decides to increase the cost of energy in Mexico, Peñoles won't be severely affected. And also they produce the wind farms to keep the sustainability index they have right now. So yeah, the impact in Peñoles about the energy won't be that high. Besides, they are also investing in other things, not just wind farms, but also other sustainable energies to avoid that kind of problems and keep their cash costs low.
I think that was the last question.
Thank you.